Hello everyone. Good morning. Uh, Myself Robin Sharma from KNM Associates LLP. I am with Sagar and Ms. Simani also here to present you to explain the budget which was presented by our Finance Minister Ms. Nirmala Sitharaman on February 1st, 2025. I am here to start with the key sectorial impacts which were provided in the budget introduced by the Finance Minister. So first we'll start with the agriculture sector and its allied activities. So there is a scheme called Prime Minister Dhan Dhanya Krishi Yojana, which will be provided district development program covering 100 districts and expected to benefit of 1.7 crore farmers. The government has also enhanced credit limits through KCC, providing short-term loans up to 5 lakh rupees of benefiting 7.7 crore farmers, fishermen, and dairy farmers. Also, the finance minister said a Makhana board will be established in Bihar to enhance the productions of and processing the value addition, marketing, and organizing the FPOs. A 5-year mission aimed at enhancing the productivity and substantiality of the cotton farming will also be instituted. Other than that, in this budget, a self-reliance was introduced on the pulses, providing a special focus on tur, urad, and masoor dal, developing and make climate resilient seeds commercially available, improving protein content, boost productivity of these pulses, enhance post-harvest storage and management, ensuring fair prices for the farmers for these specific pulses. Also, the government wants to improve the rural economy by offering institutional account services, direct benefit transfers, cash withdrawals, and EMI collections. Government also will provide credit services and micro enterprises and insurance solution and assisted digital services. One of the major sector which was there are major changes in the budget is in the MSME sector. The government has proposed a classification criteria for MSMEs, which is changed from now on, from the next year onwards. The micro enterprises and small enterprises and medium enterprises whose investments were 1, 10, 50 crores were changed to 2.5, 25, and 125 CR. Same with the turnover for MSME. For micro enterprises, it was 5 crores. Now it's proposed to 10 crores. For small enterprises, it was 50, and now it's proposed to 100 crores. For medium enterprises, it was earlier was 250 crores, and it is now proposed for 500 crores. Also, the government will issue credit cards to the micro enterprises up to a limit of 5 lakhs for the first persons who were registered on the Udyam portal. In the first year of the implementation of the scheme, the 10 lakh of these cards will be issued. Furthering enhancing the scheme for the MSME sector, a new scheme will be launched to provide a term loan up to 2 crores in the next 5 years. For the first 5 lakh entrepreneurs, including women, scheduled caste, and scheduled tribes. Also, to improve the access to the credit by these MSMEs, earlier the investment government was providing for 5 crores. Now it's supposed to 10 crores. For startups, it was 10 crores, and now it's for 20 crores. For exporter MSMEs, it is they will be providing term loans up to 20 CRs, providing a major revamp in the MSME sectors. The government has also want to increase the labor incentive sectors, providing a product focused schemes for footwear and leather sectors. This scheme will provide employment for 22 lakh people, generate a turnover of 4 lakh crores, and achieve exports worth 1.1 lakh crores. Government will also want to improve our toy sector, and the focus will be placed on developing clusters, enhancing skills, and building manufacturing ecosystem to produce high quality, innovative, and sustainable toys to reflect the Made in India brand. Support for the food processing systems. The establishment of a National Institute of Food Technology in the Bihar will boost farmers' income and provide skill development, entrepreneurship, and employ opportunities for the youth. Now, moving on to education sector, the Saksham Anganwadi and Poshan 2.0 program will be enhanced to provide nutritional support over 9 crore children, pregnant women, and adolescent girls with increased cost of norms. Also, in next 5 years, 50,000 adult tinkering labs will be established in government schools to inspire curiosity, innovation, and provide a scientific mindset among the young learners. Also, government will provide an additional center of excellence in AI for education, which will be set up with established cost of around 500 crores in next 2 or 3 years. in addition to the three Center of Excellence in Artificial Intelligence, which were already established by the government. Now moving on to the major sector in which the current government is investing from last 10 years, which is infrastructure sector. In the infrastructure industry, they will develop a new three-tier pipeline of projects suitable for implementation through public-private partnership. States are also encouraged to create similar pipelines that can avail themselves and support from the India Infrastructure Product Development (IIPDF) scheme to prepare their PPP proposal. There is an allocation of 1.5 lakh crores for 50 years interest-free loans to the states intended to support their capital expenditure and incentivize the reforms. Also, in Bihar, the Patna airport will be expanded in also including the Greenfield airports, which will be developed in that state, providing a financial support to the Western Koshi Canal ERM project, benefiting farmers around across 50,000 acres in the Mithianchal region. One of the major sectors is also their startups. As of now, through alternate investment funds, 91,000 crores can be provided to the startups by the government. The government has also created an additional contribution of 10 crores for the startups. As a part of initiative, a deep tech fund of funds will also be explored to support the growth of the next generation startups. Sunset date for cooperating startups to claim the profit-linked tax exemption, which was earlier 2025, now will be extended to 2030. In the urban sector, a fund of rupees 1 lakh crores will be set up for the city growth and redevelopment and water and sanitation. This fund will finance up to 25% of projects cost with at least 50% funded by bonds, bank loans, and PPs. 10,000 crores is allocated in 25-26. Now moving on to power and nuclear energy reforms sector. States will be incentivized to reform electricity distribution and enhance intrastate transmissible capacity. To support these reforms, the states will be allowed additional borrowings of 0.5% of their GSDP, that means gross state domestic products, improving the financial health and efficiency of electricity companies. India also aims to develop at least 100 gigawatts of nuclear energy by 2047 as a part of its energy transition efforts. To facilitate this, the private sector participation, necessary amendments will be made to the Atomic Energy Act and Civil Liability for Nuclear Damage Act. A nuclear energy mission with an allocation of 20,000 crores will be launched to support research and development. Small modular reactors, at least 5 indigenously developed SMRs, will be operational by 2033. In this budget, government has provided a major development to the tourism sector. The government will partner with the states to enhance the infrastructure at 50 major tourist destinations through challenge mode. State must provide land for the key infrastructure and hotels in these destinations will be included in the infrastructure harmonized master list, making them eligible for financial and policy benefits. This will lead to the employment in tourism, support for homestays, e-visa and fee waivers, improved connectivity, and spiritual and religious tourism. India will also promote medical tourism in partnership with the private sector. This includes improving healthcare sector infrastructure, easing visa norms for international patients, and developing India as a global hub for affordable, high-quality medical treatment. In investment sector, to boost the research and development, a 20,000 crore initiative will support private sector-driven research development and innovation. Additionally, a deep tech fund will be explored to accelerate next generation startups. Government has also introduced a PM Research Fellowship in which over the next 5 years, 10,000 fellowships will be awarded for technological research in IITs and ISCs with enhanced financial support to nurture top talents. A new mission will be developed foundationally geospatial infrastructure and data, aiding land records, modernization, urban planning, and infrastructure projects under PM Gati Shakti. Government has also planned a large-scale initiative will survey, document, and conserve over 1 crore manuscripts, collaborating with academic institution, museums, and libraries. A national digital repository will be created to preserve the shared knowledge systems. Now, moving on to export sector, a dedicated mission will be launched with sectoral and ministerial targets led by the Ministry of Commerce, MSME, and Finance. It will focus on export credit access, cross-border factoring, and MSME support to overcome non-tariff barriers in global market. Also, including the above, unified digital platform will be created for trade documentation financing solution aligning international best practices and complementing the unified logistic interface platform to streamline the export. Domestic manufacturing capabilities will be enhanced to integrate India and global supply chains with strategic sector identified for development. Facilitating groups, including government and industry leaders, will support selected products and industries. In the air cargo and warehousing development, infrastructure for air cargo and warehousing will be upgraded, particularly for high-value perishable horticulture products with streamlined cargo screening and custom processes to improve the export efficiency. In this budget, there are many other sectors also in which the budget has announced providing relief to major sectors. One of them is Asset Monetization Plan 2025-30. Building on the success of 2021 Asset Monetization Plan, a second plan was also introduced for 25-30 will be launched to generate around 10 lakh crore for reinvestment in new infrastructure projects. Regulatory and fiscal measures will be refined to support and optimize this initiative. Jal Jeevan Mission, a major promise made by the current government in 2019, the tap water mission providing potable water to 15 crore rural households since 2019 will be extended until 2028 with increased funding focusing on infrastructure quality, operation and maintenance, and citizen participation, Jan Bhagidari, through state and union territories partnerships. Other than that, shipbuilding financial assistance policy will be updated to reduce cost, including credit notes or ship breakings. A maritime development fund of 25,000 crore will be established for long-term financing with up to 49% government contribution and rest raised from the ports and private sector to support the maritime industry and encourage competition. Also, Udan regional scheme, which was already introduced in last 10 years back. Udan scheme has connected 88 airports and 619 routes as of now, benefiting 1.5 crore people. A modified version will be enhanced regional connectivity, adding 120 new destinations and aiming to carry 4 crore passengers over the next 10 years, supporting helipads, smaller airports in remote area, including the Northeast. Mining sector reforms. In mining sector, reforms in the mining sector, including minor minerals, will be promoted through best practices, the establishment of a state mining index. Additionally, a policy will be introduced for recovery of critical minerals for tailings, providing affording housing to the public. Swami scheme was successfully completed 50,000 dwelling units with another 40,000 units planned for 2025. Building on this, Swami Fund 2 with 15,000 crores will be set up to complete 1 lakh more units supported by the government, banks, and private investors. PM Gati data for private sector to support PPPs with and 8 private sector project planning. Access to the relevant data and maps from the PM Gati Shakti portal will be provided. That's all from my side on the key sectors. Now I will request Ms. Himani to provide some insights on the amendments in the Income Tax Act. So Ms. Himani, over to you.
Thank you, Robin. Now I will take it over from here. Hello, everyone. Now we will cover amendments proposed in Income Tax Act. Starting with personal income tax, as per old tax regime, there is no change in income tax rate. Income tax rate are same as earlier. Moving on to new tax regime, which is default regime, tax rate has been changed. Proposed tax rate are for income up to INR 4 lakh, rate of tax is nil. For income between 4 lakh to 8 lakh, income tax rate is 5%. For income between 8 lakh to 12 lakh, income tax rate is 10%. For income between 12 lakh to 16 lakh, rate of income tax is 15%. For income between 16 lakh to 20 lakh, rate of income tax is 20%. And for income between 20 lakh to 24 lakh, rate of tax is 25%. And for income above 24 lakh, rate of income tax is 30%. Where we can claim rebate up to 25,000, now making tax zero for income up to 12 lakh, we are claiming rebate up to 60,000. For surcharge, for all tax regime, surcharge above income 5 crore, surcharge rate is 30%, 37%. But in new tax regime, surcharge is restricted to maximum 25%. For income above 5 crore, surcharge rate is 25%. Moving on to exemption that can be claimed by individuals. First exemption that individuals can claim is from NSS, that is National Savings Scheme from Taxation. Section 80 CCA is amended to exempt withdrawals. Earlier, withdrawals are taxable. Now it is proposed to exempt withdrawals. This relief follows the August 29-24 notification. That is, amendment is applied retrospectively from August 29, 2024. Annual value of self-occupied property simplified. Now the individual can claim annual value of two house is nil. Moving on to corporate tax, there is no change in income tax rate. For claiming tax at rate 25%, turnover shall not exceed 400 crore in previous year 22 and 23. Turnover above 400 crore, tax rate is 30%. Moving on to exemption, for corporate tax, there is no change in income tax rate, and for firm, there is no change in income tax rate. Tax rate for foreign company is 35%, and tax rate for firm is 30%. Moving on to TDS and TCS rate, new TDS and TCS rate has been proposed. For Section 194 LBC, that is TDS deducted for income in respect of investment in securitization trust, TDS rate earlier is 25% and 30%. Now it is proposed to decrease the TDS rate to 10%. For Section 206C1, that is TCS on sale of good of timber, TDS rate has been increased from 1% to 2%. And for Section 206C, earlier TCS rate is 0.1%. Now this section has been omitted. Other major amendments in TDS and TCS is higher TDS rate shall be only applicable only in case of non-PAN card holder. Section 206AB and 206CCA is omitted. TDS threshold increased from 7 lakh to INR 10 lakh on foreign remittances. TCS not applicable where remittance is from loan obtained from specified financial institution for pursuing education. TDS threshold has been proposed. For Section 193, that is interest on security, proposed threshold is 10,000. For Section 194A, that is interest other than interest on security, for senior citizen, earlier threshold is 50,000. Now it has been reduced to INR 1 lakh. In case of other, where payer is bank, cooperative society, and post office, earlier threshold is 40,000. Now it is proposed to increase the limit 50,000. In other cases, earlier threshold is 5,000. Now it has been increased to 10,000. For Section 194, that is dividend for an individual shareholder, threshold threshold has been increased from 5,000 to 10,000. For Section 194K, that is income in respect of units of a mutual fund or specified company, threshold has been increased from 5,000 to 10,000. Section 194D, insurance commission, threshold has been increased from 15,000 to 20,000. Section 194B, winnings from lottery, crossword puzzle, threshold, earlier threshold is aggregate of amount exceeding 10,000 during the financial year. Now it is proposed to limit the 10,000 for a single transaction, and that is same for Section 194BB, that is winning from horse race. For Section 194G, income by way of commission, prize, etc. on lottery tickets, threshold has been increased from 15,000 to 20,000. For Section 194H, commission on brokerage, threshold has been increased from 15,000 to 20,000. And most important, the change is announced for Section 194I, that is rent. Earlier, 2,40,000 is the limit for the whole financial year. Now the limit has been changed to a monthly limit, that is 50,000. 50,000 is the monthly limit. Section 194J, that is fees for professional or technical services, threshold has been increased from 30,000 to 50,000. Sorry. For Section 194LA, that is income by way of enhanced compensation, threshold has been increased from 2,50,000 to 5 lakh. Moving on to business tax, time limit for block assessment is proposed to be changed. Earlier time limit is 12 months after the month of the last search. Now time limit is 12 months after the quarter end. Time limit to impose penalties rationalized. Now it is proposed to amend section 275 to set a 6-month time limit from the end of the quarter. Rationalization of provision related to carry forward of losses in case of amalgamation. For amalgamation cases, Section 72 and 72AA is amended. Earlier, the limit is indefinite. Now, the limit is restricted to 8 assessment years. Capital asset. The definition of capital asset has been extended to include securities held by an investment fund, tax exemption for sovereign wealth fund, pension fund, and others. Tax exemption has been amended, extended from 31st March 2025 to 31st March 2030. Capital gain for FPIs, the rate has been rationalized from 10% to 12.5% on transfer of any security. Tax administration, a new section 285 BEAA is proposed to mandate the reporting of crypto asset transaction. Additionally, section 247A is a mandate to expand the definition of VDA, that is virtual digital asset. Amended to section 115 VP, tonnage tax scheme. The amendment is time limit for passing order is being extended to 3 months from the end of the quarter in which application was received. This change allows Joint Commissioner more time for verification, inspection, and hearings before making a decision. Extension on time limit for filing updated returns, Section 139 8A. It is proposed to extend the time limit for filing updated return. Earlier, the limit is 2 years. Now it has been increased to 4 years, that is 24 months to 48 months. Proposed additional tax rate are for filing updated return within 1 year, additional tax and interest is 25%, and from 1 year to within 2 years, additional tax and interest is 50%. Within 3 years, that is 60%, and within 4 year, tax rate additional is 70%. These amendments will apply from April 1, 2025. Moving on to amendments in the international taxation, a new provision in section 92CA is amended, that is arm's length price that is determined for 1 year. It will now applicable for next 2 years if assessee opts in. And the computation of income under section 155, a new subsection 21 in section 155 will require assessing officer to recompute total income for 2 consecutive years if transfer pricing officer validates the option. Uh, That's it for income tax. A new income tax bill is likely to be introduced in next week. Thank you. And now I will hand over it to Mr. Sagar Khurana.
Thank you, Himani. Uh, Hello, everyone. Now let's move to amendments under GST laws. Okay. So, amendment has been made in definition of input service distributor to include interstate supplies on which taxes to be paid on RCM basis. Earlier, there were restriction and only intrastate RCM were covered under the framework of ISD mechanism. But with this proposed amendment now, it is clarified that both intrastate and interstate RCM will be covered under ISD framework. Amendment has been proposed in sections related to time of supply of vouchers, which have now proposed to be omitted. GST Council has earlier clarified that vouchers are neither treated as supply of goods nor supply of services, and therefore vouchers are not subject to GST. So, to align with the clarification, this amendment is proposed to eliminate the need of determination of time of supply in case of vouchers. A small amendment is also made in section 17.5. 17.5 talks about block credits, that is, the transactions on which ITC shall not be available. Clause D of 17.5 restricts the ITC on construction of immovable property other than plant or machinery. Now, amendment is proposed to substitute the word plant or machinery with plant and machinery to avoid confusion and provide clarity in many ongoing cases. Amendment is proposed in case of credit notes. Now, amendment states that when a credit note is issued against any invoice on which ITC was availed, supplier can reverse output tax only if the recipient has reversed the ITC. Otherwise, supplier cannot reverse output tax credit. Benefit will be available only if the recipient has reversed ITC availed on such invoice. Amendment has been made in section 38. 38 talks about details of ITC provided by portal in the form of 2B. Amendment is now proposed to omit the word auto-generated from section 38. This clerical amendment is proposed to streamline JCR 2B and ensuring accuracy in ITC comparison. Section 39(1), which talks about furnishing of returns. The provisions of Section 39 are proposed to be amended to empower government to prescribe conditions and restrictions for return filing and providing legal backing for hard locking auto-populated data in 3B. If this amendment is finalize, in that case, department will have the power to fix few columns in 3B in which data cannot be modified by taxpayer. Amendment has been proposed for pre-deposit in case of penalty. Now, in case of appeals before appellate authority and tribunal as well, first level and tribunal, if the appeal is for the cases in which only penalty is involved and there is no tax amount, in that cases, 10% of penalty amount shall be now pre-deposited as shall be required to be pre-deposited mandatorily to file an appeal. Uh, so a new section has been introduced in this bill, Section 148A, which talks about track and trace mechanism under GST. This mechanism enables track and trace mechanism, like provides department to implement effective monitoring and control of monitoring on specified supplies. This system is based on unique identification marking, and this will establish a framework to provide traceability through supply chain, ensuring better control and compliance from departmental side. Section 122B has also been proposed, which provides for penalties in case 148A is non-compliant. So, last amendment in GST is under Schedule 3. Schedule 3 provides lists of supplies which are neither considered as supply of goods nor services and hence are not covered under GST. A new point is proposed to be added in Schedule 3. If the goods are warehoused in SEZ or free trade warehousing zone and sold before clearance, then the transaction shall not be subject to GST. The department has also clarified that if before this amendment is accepted or is in enforced, before that, if any tax is paid on such transaction, refund will not be issued in that cases. Now moving on to customs. So in customs, section 18 has been amended to provide time limit of 2 years to finalize provisional assessment and also to provide for grounds where this limit of 2 years shall not be applicable. Earlier, there were no time limit for provisional assessment, and it used to take a longer time than the specified time now. But now, since the time has been locked, so every provisional assessment needs to be finalized within the span of 2 years of time. A new mechanism is also to be introduced for revision of entries post clearance and goods, allowing importer to revise any entry within the time that will be prescribed. Another amendment is proposed in Section 127 to set up an interim board to carry functions related to settlement of cases. In the existing regime, there is a settlement commission which is now to be which is now proposed to be replaced with interim board. Once the interim board is constituted, all the pending applications shall be dealt by interim board only, and interim board will take over the cases from the situation where they are still standing at the time of constitution of this board. Section 127D, Section 127F, and 127G are proposed to be amended with effect from April 1, 2020. Of settlement commission shall be thereafter performed by interim board. Now moving on to amendments in excise. Uh, the amendment in excise are also very similar to the same in customs. Again, Section 31, which empowers with settlement commission under excise. Under excise, also a new section is proposed to be inserted to set up interim board for settlement of all the pending applications. The pending applications will be transferred to interim board from date of constitution and will be dealt by it from the state where these are still pending. Every board will have 3 members with rank of chief commissioner or above, as nominated by Central Board of Indirect Taxes and Customs. And decisions for these ongoing cases will be made based on the majority of the members. The present section for settlement commission shall be ceased with effect from 1st April 2025, and various sections are modified by substituting interim board instead of settlement commissions. Now, from 1st April 2025, the powers of settlement commissions shall be exercised by the interim board, and provisions shall be applied to interim board in same manner as they applied to settlement commission. Thank you. This was it on indirect taxes. If anyone have questions, you can share through chat box. You can also reach out to us through emails or through our personal contact numbers and can ask if there is any clarification required. Thank you, everyone.
Thank you for joining us.